Assalamualaikum warahmatullahi wabarakatuh. We are Group 7 and this short video will be about the practices of Islamic banks in the South of Asia. Now the main focus will be on how access to funds is made available to the public to have a good flow of funds in the country. Let's start with Bangladesh. Based on the articles reviewed, the Islamic banks are already given support by the central bank to have a short-term funding, mainly to assist their liquidity, which was only been offered to conventional banks previously. So the practice of this short-term funding instrument will be based on Mudaraba contract, with Bangladesh Bank being the Rabbul Mal and the Islamic banks as Mudarib. Now, as Bangladesh is a country that is behind in aspects like economics and growth, which will have to do with the flow of funds in the country itself, which bring us to the importance of the funding process that is made specifically to these startup companies that can either support or harm the country's growth and social detriment. 5 measures of screening were proposed, such as the funding terms and the risk assessment, analyzing the long-term effect of companies, the nature of the service offered by the business, and whether the startup could make a significant impact on the existing infrastructure facilities, and lastly, whether the service provided and the team is innovative enough and equipped with the knowledge to add values for customers. Now I will pass to my group mate Mukriz.
Next is Pakistan. Based on the article reviewed, the government has made effort in the funding for the growth of Islamic finance. According to the World Bank in 2017, only 21% of the adults have a bank account and 13% of these adults claiming religious objection. However, at the end of the first quarter of 2022, Pakistan's Islamic finance sector was worth over $42 billion and 67% of the overall assets in the Islamic financial sector are contributed by Islamic banks. Central Bank of Pakistan has released new guidelines for Islamic bank deposits backed by asset pools employing Mudarabah, a type of investment partnership in Islamic finance. The pools will be required to keep a minimum of 20% of their assets in liquid securities, and though this requirement may be lowered to 10% with the consent of Sharia expert. In the next 5 years, Pakistan's authorities hope to increase the proportion of Islamic finance in the countries.
About India, the Reserve Bank of India and the Securities Exchange Board of India (SEBI) are the 3 financial authorities in India which regulate the banking and financial sector. In 2008, the RBI sensed the need to introduce Islamic banking to extend infusion to the unbanked population. Islamic finance in India is taking root through greater community participation, with a handful of Islamic NBFS and a couple of dozen cooperative societies set up, and the numbers on the rise. Institutional arrangements for producing human capital for Islamic finance in India have always been ahead of the requirement, and avenues for its development have always been ahead of the requirement. The Islamic finance and banking industry in India is largely established with no regulatory framework or provision in India's 1949 Banking Regulatory Act that allows for the existence of a zero-interest parallel banking system.
In this video, I'm going to talk about the Philippines Islamic banking and financing activities. Islamic banking and financing has been going momentum in the Philippines in recent years. The country has a significant Muslim population, primarily concentrated in the southeast regions, where there is a demand for Sharia compliance financial product and service. So, in terms of funding, Islamic banks in the Philippines rely on various sources to finance their operation and provide Sharia compliance financing to customers. These sources include customer deposit in bank accounts and investment in Sharia compliant assets, and funds operated through partnership and profit sharing arrangement. Furthermore, the Philippine government, through its National Development Company, has explored issuing suku to raise funds for infrastructure projects. Suku are structured financial instruments that comply with Islamic principles and provide investors with return derived from the underlying assets. Overall, while the Islamic banking and finance industry in the Philippines is still in the early stage, there is growing interest and support from regulators and market participants. So that is all for me. I'll pass to my another group member.
Last but not least, in Indonesia. Islamic finance in Indonesia is growing fast with new and creative products like Green Retail Sukuk that attract young investors and promote sustainability. The money raised is used for projects like improving rural transportations and managing water resources. Sharia communities are like Community Murabaha, offer certainty and attractive financing options. These advancements create a fairer and more inclusive finance system, helping Indonesia's economic growth and establishing it as a leader in global Islamic finance. To ensure inclusivity, it's important to consider different perspectives and seek advice from experts and scholars. Islamic banking, which shares profit and risk, promotes a more equal distribution of wealth for social and economic justice. By embracing these principles and innovations, Indonesia aims to strengthen its finance industry, boost economic growth, and attract a wider range of investors. In summary, it's important to follow Sharia principles during the funding process startups, from financial problems like bankruptcy and overwhelming debt. Islamic banking promotes fairness by sharing profits and risks and encourages ethical business behavior. By considering different perspectives and seeking guidance from experts, the industry aims to create an inclusive environment and develop a comprehensive understanding of Islamic finance principles. Thank you.